Wal-Mart this morning reported earnings that matched Wall Street estimates, increased their profit forecast for the year, but the company's top line, their sales, came in light. Joining us now is David Strasser. He's the #1 analyst on Wal-Mart and Target, according to data we keep here at Bloomberg. He's also managing director and analyst at Janney Montgomery Scott. So, apart from the earnings and the figures there, the thing that jumped out at me on the Walmart conference call was the idea that more and more of their consumers are using food stamps to buy their purchases. Yeah. And they're buying groceries more than they're buying everything else. That, to me, seemed to be a real snapshot of their consumer base right now.
Well, they said that. They also talked about the paycheck cycle remaining very pronounced, talking about unemployment, higher gas prices.
People waiting till they had their paycheck in hand before they actually spend.
Right, and you're seeing that across all of retail. Traffic's up, ticket is down for the most part. There's just not a lot of liquidity. People are using debit cards more than credit cards because they can't get the credit. There's a lot of, just demand. That's why demand overall just remains lethargic, particularly at the lower end that don't have the savings to dig into.
And they're shopping closer to back to school. I guess that's an excuse for why apparel and home goods sales weren't as strong as they had hoped.
Right, and that's another trend we've been hearing, whether it was the office products or the Office Maxes and the Staples, or not Staples, we hear from them later this week, Office Max, Office Depot, people spending closer to need, buying around holidays, whether it's Memorial Day, July 4th, in the last quarter. That is a trend we're seeing. People wait, and a lot of that is waiting for sales. People are waiting to see what the sale is going to be around the holiday to be buying.
Now, yet, we led into this talking about meeting or beating expectations and upping profit forecasts. This is still about cost cutting. I mean, how much more can be squeezed out of the production?
Well, if you look at Walmart, a big positive, CapEx was lower than our numbers and we're down. If maybe CapEx is coming down below next year, that can help continue to drive share repurchases. That's going to be helpful.
At Walmart.
At Walmart. Home Depot, same thing. They were talked a lot about share repurchase to help them a bit too, relative to our expectations. SG&A at Walmart was cut very significantly. Part of that, unfortunately, is bonuses. Incentive pay for managers, because they're missing their sales lines, they're not getting the bonuses, so that's helping earnings. Saying Walmart,
wow.
So all of these things, and when you're seeing SG&A cut, that doesn't necessarily help the broader economy either, because usually it's due to cost cuts of some sort.
Well, talk to me about what's been happening with the executive structure at Walmart. We saw their head of their apparel business just leave. We saw the head of the U.S. business, Eduardo Castro-Wright, sort of be shifted over to global sourcing, and we saw marketing as well, their head leave. Yeah. Why?
Well, I mean, some of the programs that they were talking about, most recently the very aggressive rollbacks, which I think we've talked about a month or so ago, they've kind of backtracked on that. I think there's just a feeling that that they needed a change in strategy. They're talking, adding back Actionality, a big part of the way they drive, sales inside the stores, driving just need and want, but through Actionality, that had been taken out of the store in order to clean up the store. So I think it was a need to kind of change direction a little bit, particularly domestically at the company.
Because the growth that is being experienced is overseas at this point. How much is their international business?
I think it's about a quarter of the business, maybe a little bit more, but something along those lines. And ex-currency, it's still growing very well. A lot of that is square footage growth, particularly in China, Brazil. Big, those are areas. They're trying to make a big push into the BRICS. They're much more exposed to China and Brazil, trying to get to increase their growth in India. And I thought you just had a headline: India consumers somewhere want Walmart or Tesco.
Right. But there's that complicated structure of government co-ownership and the like.
Same with Russia. I mean, it's going to be very complicated to get in there. And the real question is, will they ever get the returns in those markets? That's why CapEx is so important. I kind of would rather see them pull back on the CapEx, continue to focus on building the U.S., improving the U.S. business, rebuilding the U.S. business, since growing all over the world. I don't think they necessarily agree with that.
We will stay tuned.
Thanks.
Thank you a lot.